Hi, my name is Roger Schlater. This video is actually about prepayment penalties on SBA loans, and this could actually be on SBA 7A guaranteed loans or on SBA 504 loans. A lot of people don't realize that SBA does have prepayment penalties on these loans. I think most people would think that SBA would not have a prepayment penalty on their loans, but they do. There are prepayment penalties on SBA 7A loans as well as SBA 504 loans. I covered this in the video, the SBA prepayment penalties on the 7A loan as well as the 504. If you stay to the end of the video, I'll give you some tips on both of the prepayment penalties. So anyway, SBA 7A program has prepayment penalties in their loans under the following conditions. Number one, the loan must have a maturity of 15 years or longer. Number two, the borrower voluntarily pays 25% or more of the outstanding balance of the loan. And number three, the prepayment is made within the first 3 years after the date of the first disbursement of the loan proceeds. The prepayment fee is as follows. The first year after disbursement, there is a 5% prepayment penalty. And then the second year, after the disbursement, it's 3% prepayment penalty. And then the third year after disbursement would be a 1% prepayment penalty. Now the 1% isn't really that bad. So anyway, on the 7A loans, usually most people have them for the 3 years, so most people don't even know there's a prepayment. So anyway, now in the 504 loan, the prepayment of the SBA 504 loan is really pretty straightforward, a little bit more than the SBA 7A loan guarantee program. The prepayment is levied against the gross debenture. Now this is the SBA portion, including the fees, so the gross debenture. The prepayment penalty runs for 10 years. Most of these loans are for 25 years, so you're probably going to have it for 10 years. And basically is the gross debenture, the note times the note rate of the loan. Now the note rate will actually go down. It'll go down 10% each year till it reaches 0 at year 10. And let me give you an example of using the current rate things. This is like August of 2022, and the 10-year Treasury rate is 2.82%. And the note rate was approximately 1% higher than the 10-year Treasury rate at 3.84%. So the note rate of the 3.84% would be the prepayment rate for deals funded in August 2022. This rate would go down 10%. It's going to go down 10% each year till it reaches 0 at year 10. So anyway, that would mean that, it's down to like, just a little over 1.5, at the 5-year period, which really isn't that bad. And like I said, most people with the 504 would actually pay off the bank portion first and leave the SBA portion there. So anyway, using the SBA 504 when rates are high, sometimes can be treacherous if rates are going down during the prepayment period and the borrower wants to prepay the loan. Now I've had this happen before where I had a borrower who got the rate at a pretty high percent, and then a couple years later the rates are falling. Well, of course he wants to prepay the loan and go ahead and get a loan with a different bank at a lower rate, but the prepayment was so high. I mean, to give you an example, if the prepayment rate was 6 to 8%, the prepayment fee on a $1 million loan, the first year would be $60,000, at 6% and $80,000 at 8%. Normally the borrower would want to refinance. It would not want to refinance. Normally the borrower would not want to refinance if the rate goes up, because their payment would be higher if the rate went up. So they really don't want to do that. So it's only applicable really if rates go down that you really want to use that prepayment. 7A loan prepayment penalty is only levied on prepayment amounts of 25%. One way to bring the loan down is to prepay 24% a year to avoid the prepayment penalty. 3 years is not a bad prepayment penalty, especially for the for the at the third year being 1%. So anyway, and then with the 504, like I said before, you can always pay off the bank portion. They don't really like to hear that, but you can always pay off the bank portion and then start paying off the SBA portion after the 10-year period is up, when you have no prepayment penalties. Commercial banks will usually have a prepayment penalty if the rate goes down, because they would have to replace that loan with a lesser interest rate loan. The rate going up will not have a prepayment penalty because they can deploy that capital at a higher rate of interest and make more money. So anyway, you really do not want a prepayment penalty on any loan, but you do have to look at all aspects of the loan terms to see if the loan has any redeeming qualities other than the prepayment penalty. I don't think I'd want to knock it alone just because of prepayment penalty. It may have a drastically lower rate, it may have a longer term. There may be a lot of things that are good about this loan. So anyway, if you like this kind of content, loans and business tips, and please subscribe to my channel and hit the bell notification to be notified of future videos, and also hit the like button if you found something of value in this video. So anyway, my name is Roger Schlueter. Thank you very much, and I will see you in the next video.